Hello, welcome back. We're still at Beaver Creek, and I'm with Dave Cole, the CEO of EMX Royalties. Dave, good to see you.
Peter, great to be here.
I haven't had an update from you, I think, in maybe over a year. I think it was Quebec 2022. So there's been a lot that's happened, but more recently, something pretty transformational over the last few weeks.
Yeah.
Why don't we just start things off for those less familiar? Who are EMX, and then can you go into a bit about the cap structure as well?
EMX Royalty Corporation, we love royalties. We love to build royalty portfolios. And we do that dominantly through royalty generation, where we actually go out and acquire the properties, coalesce data, illustrate prospectiveness, sell them, keep royalties. To augment that portfolio, we do what our competitors mostly do, and that is to buy royalties, pre-existing royalties. And the same team that's doing the royalty generation work is continually looking for opportunities to buy royalties to augment our portfolio. We've also done quite well with our strategic investing over the years, made about $50 million in the last 20 years USD from our strategic investments, which we wrap right back into royalty generation and royalty purchase.
Good, and then just touch on the cap structure if you don't mind.
110 million shares issued and outstanding, about 126 million fully diluted, and including the recent payment that we got, roughly $15 million in cash and $44 million in debt to Sprott at a 7% fixed coupon rate through December of 24.
Okay. So talk to me about this deal. Obviously, it's been a long time coming, right?
Yes. Yeah.
You've reached an agreement. It wasn't the 5%. It wasn't the lowest it could go. You've sort of amicably met in the middle.
Absolutely right in the middle of the two end members. That's correct. Yeah. And
So-
we're quite pleased with that. Yeah.
One of the things I wanted to touch on, obviously, there was a prepayment as well. Has that already been paid, or when are you expecting?
Yeah, $6.68 million in the bank.
Okay.
We've received those monies, and that is the back royalties that were owed to us. So they're all caught up now, and we expect to receive royalty payments on a quarterly basis from here on, many decades into the future. It's a very well endowed piece of real estate.
Good. And just talk us through, now that the deal is done, you can actually provide some potentially consensus economics or...
We'll be able to provide even greater detail after we file our technical report on the royalty, a royalty 43101 document. We'll update that document actually. We will receive, as part of the settlement, greater data over the deposits on the property, and that will facilitate us making forecasts eventually. We're not in the position to make those forecasts yet.
Okay.
I will say that the royalty is, at the current pay rate, is about 3.9 million USD. Whilst they're mining in the upper high-grade zone, which is the smaller zone, the royalty becomes immensely valuable. Not that we're unhappy with that, but the royalty becomes even more valuable when they get into the lower zone. And Zijin has announced an additional capital expenditure of $3.5 billion in the district.
Yeah, tell me a little bit more about the deposit, obviously, because like I said, they're mining the upper zone at the moment, but there's a bigger prize on the next door, right?
Mm-hmm. Actually, right below it. Yeah, so it's a big porphyry copper and gold system with good gold credit. The last 43101 compliant resource was, in round numbers, 2 billion tons at approximately 1% copper equivalent. It's a very big system. Zijin has had a half dozen drill rigs at least drilling on that property, doing further delineation drilling and making additional discoveries within the footprint area for years now. And I believe they're very happy with the results and thus the announcement of greater capital expenditure within that system. It's all an underground mine. They're mining cut and fill in the upper high-grade portion now, and will likely build a block cave within the lower porphyry zone and dramatically increase production in years to come.
Good. Okay. So, and I guess just talk us through the overall portfolio, because obviously you've got a very large producing asset in Chile as well, right? So just talk us through, because I think what's quite nice now that this transaction has been, or this deal has been finalized. I think people can now start actually understanding, or start trying to figure out the actual value that's already there. So maybe you can just talk through the overall portfolio, and I guess I know you're saying you can't give consensus pricing yet in terms of what revenue you'll be receiving from that mine, but what have you been receiving from everything else so far?
Yeah, so you mentioned Caserones. Caserones is our largest cash flowing royalty. That's paying pre-tax about 10 million USD per annum. We do see production upside there. Lundin, who is the new operator of that mine, having purchased 51% recently, they're indicating to the market that they're quite bullish with respect to their ability to increase production. And we know Lundin Mining Corporation has a history of being aggressive on the exploration side. That's all to the royalty holders' benefit.
Yep.
And I'll point out that these two generational copper assets, the copper moly asset that Lundin operates in Chile and the copper gold asset that Zijin operates in Serbia, are just fantastic cornerstones for EMX and our transition to become a mid-tier company with strong cash flow. I'm delighted to have exposure to those two.
Good. And what is the strategy now moving forward? Because obviously we speak to a lot of royalty companies, and it seems like everyone's looking for cash generative assets. They're not really looking at things that are further down the pipeline, exploration or even earlier stage development projects. Everyone seems to be looking for cash. In this sort of type of market, obviously quite a soft market, equities are quite, they're finding it quite tough to raise money. Are you finding quite good opportunities here?
So, as is commonly the case, our viewpoint on the market and our viewpoint with respect to what we should be looking for is slightly different than our competitors.
Yeah.
We're about astute allocation of capital, and we're always trying to glean within the current capital market situation where the opportunities are. So right now we see opportunities for early stage,
Okay.
non-cash flowing royalties.
Yeah.
And I don't need to go head to head for the cash flowing royalties necessarily. And one of the reasons why we can afford to do that is because of our royalty generation work is continuing doing deal flow and adding to the asset base within the company. And we can all do financial engineering and understand what a cash flowing royalty is worth based upon that discounted cash flow. Yep. But the reason why you really want to own a royalty portfolio is discovery optionality. And that discovery optionality can come deep within the pyramid. And EMX has multiple examples of ongoing discoveries within that portfolio that have come to us thanks to this model.
Do you feel like you sort of get rewarded for going after the exploration plays? The only reason I say that is because obviously, like I said, with other royalty companies, usually the exploration plays on a NAV basis isn't really valued extremely highly. How are you able to extract value from going after the exploration side?
So I think you're hitting on a key point here. And that is that our share price does not represent the depth of the portfolio and those ongoing discoveries and the potential for additional discovery, what everyone calls discovery optionality within that portfolio. And it's my job to make sure that that gets properly communicated. I believe there's a significant inefficiency in the market and a gap there for EMX to fill.
Okay. So talk me through the type of opportunities that you are looking for. And obviously you're mentioning exploration there, but commodity-wise, obviously you're quite big in copper already. Is that something that you're still driving for?
So I'm so happy to be exposed to long-lived generational copper assets. We're very bullish long-term copper, hard not to be. Yep. And as Mr. Bristow says, gold is the most precious and copper is the most strategic. And that dominates our current cash flow. It also dominates our portfolio. That being said, we'd love to be exposed to other metals. So right now, approximately, not by design, just fortuitousness, about 50% of our top line revenues are coming from base metals and 50% from precious metals, and those are dominated by copper and gold. I think that's a great mix. Quite honestly, I'm not driven by having a specific amount of precious metal exposure or a specific amount of copper exposure. We're driven by allocating capital astutely into assets that have excellent prospectivity, that enable that discovery optionality, because that's how royalties really pay off.
Okay, just talk me through your other cash flowing assets at the moment.
Happy to. You know, we've had Leeville for many years. It's paid us a total of $25 million in royalty revenues since we've owned that. It's currently paying at a rate of about $2.5 million. Barrick, the operator of the Nevada Gold Mines joint venture, continues to announce greater discovery and development within our footprint and immediately adjacent to that. In the heart of the northern portion of the Carlin Trend. That's a key asset for us to have. I believe will pay for many years into the future. Then there's the Balya mine in Turkey that we generated. We have a 4% royalty there. I have overestimated and predicted the cash flow from that operation for many years, but it is now fully in production. We're getting $100,000 a month right now in royalty income from that deposit. I expect it to be long-lived, and I do see distinct potential for that to increase in production.
Good. Obviously, a lot of cash coming into the business now. What's the strategy in terms of the spot debt? Is that something that, is it just something that you want to pay the interest off, or is it actually something that you want to actually pay off a bit quicker now that you've got so much cash flow?
Yeah, so debt-free is the way to be long term. And of course, the bond market has moved substantially since we put that note into place. It is, fortunately for us, at a fixed coupon rate of 7% until December of 24. But You know, if we were to refinance that now or to extend that note, the interest rate would not be 7%, right,
exactly.
in today's world. So, so we're keenly aware of that. My intent would be to pay that down substantially, perhaps cut it in half or even more before finding a facility to advance that, perhaps with a senior bank.
Brilliant. Okay, and just talk me through what should we be looking out for? Obviously, huge news over the last couple of weeks, but what else can we expect over the next 6 to 12 months?
Continued deal flow from what we do best, and that's royalty generation. You know, we just continue to acquire prospective mineral rights around the world and sell them.
Yep.
And we're known for that, and you'll see more.
Perfect. Dave, thank you for your time.
Thank you, Peter.
Cheers.